Alrighty, guys, welcome to chapter 4. We are officially over getting right at the halfway mark through this exam. This is going to be covering Florida statutes, rules, regulations, and all common regulations, commons to all lines. So we're going to talk about who regulates insurances, the laws, and all the common practices we need to be aware of as we're going through this. Again, I recommend that you take notes while we're doing this. You ask questions, have your camera on, ready to go. And as your host, I always like to say, subscribe to the channel. Make sure you share with your mama, your baby mamas, your cousins, and take some notes because we all know they daggone need some insurance anyways. All right, so let's go ahead and get through this, guys. So let's talk about some of the terminology we need to know for this exam. First one is going to be appointment. Appointment is the authority given by an insurer to an agent that transacts business for them. So an appointment, I know when I first heard that, I used to think that, oh, I need to schedule an appointment for my KTs, for my appointments. No, appointment is just, it's authorization the insurance company gives you to write business. Cease and desist. That is to stop and discontinue. Sometimes you'll hear lawyers say, hey, listen, you're copyright infringement. Cease and desist. They'll send a letter to somebody. Commissions. We all love commissions. We all love, that's why we get this license to make some real big commissions, right? So payment to an agent by an insurance company for placing insurance, usually a percentage of the policy premium. The word exempt, not subject to an obligation. So an exemption. We'll cover that shortly. Home office is the insurer's headquarters or principal's place of business. Inducement is to offer or attempt to influence the other party. Insolvent, unable to meet financial obligations. Reciprocity, a mutual interchange of rights or privileges. You're going to see a lot of these words throughout the chapter, so make sure you're definitely taking notes. The word statute is a formal written law enacted by a legislator. Insurance statutes can be found in the state insurance code. And the word subpoena. In order for someone to appear as a witness or submit testimony or evidence. When I hear the word subpoena, I think of the show SVU. Always subpoena someone to come to court. Dun dun. All righty, so let's go and get kicked off into this. Let's talk about insurance transactions. What is an insurance transaction? An insurance transaction is someone that solicits, negotiates, they offer any type of sales process. So they're talking about coverage, they're talking about beneficiaries, they're talking about the underwriting process, they're talking about your coverage. That's an insurance transaction. Or advising an individual concerning coverage or claims. You need to be licensed. Anytime there is an insurance transaction, you must be licensed. All right, an insurance contract is an agreement between a policy owner, often the insured, and an insurer, where the insurer agrees for a consideration to indemnify the insured for the loss of caused by specific events. Let's just simplify that. An insurance contract, you have the insured and the insurer, the insurance company and the client. The insured promises to pay the premiums, that's consideration. The insurance company promises to pay the death benefit, that's insuring clause. Back to chapter 2, there's the definitions. That they come together, they say, hey, you pay the premium. If you pass away for whatever reason that's covered under this policy, we'll pay the death benefit. The word insurers, also known as a principal, you might want to know that. Another word for insurance company is principal. Insurance companies can be classified by a variety of ways based on ownership, authority to transact business, location, and corporation, known as domicile, marketing, distribution systems, rating, and financial strength. all that says a whole lot of nothing. Let's talk about the 3 ways that companies operate. These are going to be 3 separate locations that would define how an insurance company is labeled, okay? So insurance companies are classified by the location of the incorporation. So our company is based in Atlanta. Any other company that's any other domicile or location outside of Georgia is going to be based off of another word, right? So regardless of where an insurance company is incorporated, it has a certificate of authority. So write down the word certificate of authority. An insurance company must have certificate of authority before transacting business in that particular state. So let's look at it this way. Domestic. The word domestic, this is a definition you want to write down. I'm going to give you a lot of definitions tonight. We want to take notes of these. Domestic, an insurer for an insurance company that is incorporated in this state. So the state the company's in. So wherever the home office is, it's the domestic. So whatever this state is domestic. So our company would be domestic in Georgia. Then you have a foreign insurer. A foreign insurer is someone in another state. So make sure you write foreign insurer, another state. The next one is going to be alien insurer. That is when the person is in another country. So our company is licensed in the United States. They're also incorporated in Canada. Canada would be the alien incorporation of our company. So again, write that down. Domestic is in this state. Foreign is another state. Alien is another country. Now we're going to talk about the 2 types of ownerships and policies, right? So insurance companies will write certain policies that are written different type of ways based off of who's contributing to the policy. There's something called stock companies. Next to the word stock, I want you to write equity and ownership. Anytime you see the word equity, ownership, or stock, those all mean the exact same thing. But this is going to refer to stockholders and part of a company, right? So stock companies are owned by the stockholders who provide the capital necessary to establish and operate the insurance company, who share in the profits or loss. Officers are elected as by the stockholders and manage stock insurance companies. Traditionally, stock insurance companies are non-participating. So write the word stock, non-participating policies. So non-participating stock companies do not pay dividends. So remember, write that. Stock companies do not pay dividends. The other type of policy is called mutual. When you see the word mutual, I want you to write participating policies. This is where the policy owners and the insurance companies are in business together. And participating or mutual companies, they do not guarantee dividends, but dividends are given out. Remember, when you're talking about dividends and insurance is nothing more than a refund of the premium that they overcharged you for. So excess premiums that they're returning back to you, they're not taxable because they're just returning the money back to you, and dividends are not guaranteed. All right, let's talk about fraternal benefit society. Okay, write this down. I guarantee you will see this on the exam. This is an easy question to get right. A fraternal benefit society is an organization formed to provide insurance benefits for its members of an affiliated lodge, religious organization, fraternal organization, with a representative from a form of government. Fraternals sell only to their members and are not considered charitable organizations. All I need you to do is write this: fraternal benefits societies only sell to their members. That's all you need to know. Yeah, that's all you need to know. So we talked about the word above here, certificate of authority. That is what you need in order to write business in certain states, okay? But before any state can be granted permission, they must be authorized, okay? So insurers who meet the state financial requirements are approved to transact business are considered authorized or admitted. So the word authorized or admitted means that they meet all the financial obligations and requirements in the state that they're legally allowed to write business. Those who have not been approved to do business in the state are unauthorized or non-admitted. Any questions on this? I think it's pretty straightforward. Any questions so far? Okay. If you have any questions, please stop me. Am I good to move on? Am I going too fast?
No, I think we're good.
If I'm going too fast, tell me to slow down. All right. Let's go here. Let's talk about unlicensed people, unlicensed entities. An entity that is required or licensed to be registered with the Florida Office of Insurance Regulations, but that is operating without the proper authorization is identified as an unauthorized insurer. All persons have the responsibility of conducting their own reasonable research to ensure that they are not writing policies or placing business with an unauthorized user. I don't know in what scenario someone would get away with being an unauthorized user or how that would work. We don't need to know that. We just need to know what an unauthorized user is. I'm going to skip down here just a little bit right here if you guys see me. The purpose of an insurance regulation is to protect public interest. Write that down. The purpose of insurance regulations is to protect public interest. So let's kind of look at how this breaks down. This is something huge right here. So when you look at insurance companies, how do they work? So you have the insurance company, and they're broken down into ownership. The ownership of the policy is they're either stock or they're mutual. They're either owned by a stock insurance company, stockholders, or a mutual company where they're embedded with the insurance company and the policy owners, right? Domicile means where are they located? Insurance companies are either located domestic, foreign, or alien. And their permission to write business is either authorized or non-authorized. That's all what we just covered. That's broken down in that graph right there. They don't have correlation with each other individually, but that's how it's broken down through those definitions. You need to know those definitions. Let me know if I'm good to move on. See, Tati, I see you're still writing.
Okay, you're good.
Good. Okay, perfect. So let's talk about reinsurance for insurers. Okay. So reinsurance is a contract under which one insurance company, the reinsurer, indemnifies another insurance company for part or all its liabilities. All that's saying is this: there's something called a reinsurance company. They're going to buy some of the risk of another insurance company. So if that insurance company has to pay out a lot of claims, that insurance company is not going to go out of business. They're sharing the risk among other insurance companies. The purpose for reinsurance is to protect insurers against catastrophic loss. You don't want to have all your policy owners pass away, unfortunately, and all of a sudden your business take a huge hit. The originating company that procures insurance on itself from another insurer is called succeeding insurer. You want to write this down. These are words you're going to see on there. The word ceding insurer is the original company that protects itself from another insurer. It's kind of weird, just kind of trying to explain that, because it succeeds or gives its risk to the reinsurer. Other insurers is called assuming insurer or reinsurers. Did I just confuse y'all with that? I sure as hell, I know what it says, but it's a lot. Just write this. Just write succeeding insurer is the company that procures insurance on itself from another insurer. I promise you, you will see the word succeeding insurer somewhere in the test. It's only 1 point. We're not going to worry about that in too much detail. Assuming insurer, the other insurer, sounds like that. What's that one movie? Inception or something like that. It's like a dream within a dream within a dream within a dream. I don't know if it's Inception or whatever. But we're not going to focus too much on that. When reinsurance is purchased on a specific policy, it is called. Ellie, you want to help me with that word? I'm a cuss right now. If I said that.
Oh, it is classified as facultative.
Damn, why are you cussing at me, bro? No. So when the insurer has an automatic reinsurance agreement between itself and the reinsurer, F that. Stop. Don't even worry about that. Listen, know the definition of reinsurance. They take on the risk of another insurance company, and know the definition of assuming insurer and succeeding insurer. You don't need to know that bullcrap. Okay. We do need to know this. We do need to know the financial services regulations. A lot of people miss questions on this when you don't need to. You just need to know who does the financial services regulations, the Department of Financial Services. Who do they regulate? So let's read this, and I'm going to try to summarize it for you. In 1998, Florida voters passed a constitutional amendment combining the offices of the state treasurer, who oversees the Department of Insurance, also serves as the fire marshal, and their comptroller, who also serves as the head of the Department of Banking. Beginning in 2003, all duties and responsibilities of both departments fall under the new Department of Financial Services. This is who we report to. The Department of Financial Services regulates these 5 industries. If you just write that down, these 5 divisions, I'm going to read it out for you just for the sake if you're listening to it.
Okay. You have it real soon. I can't see on one side.
You can't see it right now?
I guess it's
Is
just
this
the tablet form.
Is it your screen or is it mine?
Maybe, yeah.
Okay. I'm just going to mute you for the background noise over there. So let's talk about this. The Department of Financial Services, the following 5 divisions that are involved in regulating insurance is the Division of Accounting and Auditing, the Division of Insurance Agent and Agent Services, Division of Insurance Fraud, Division of Consumer Services, an office of insurance consumer advocates. Can y'all hear the baby in the background screaming or no? No, perfect, good. So it's not gonna mess with the report. So Department of Financial Services, they take care of, they do all the regulating of fraud and making sure that people are accountable for what they're doing. Let me know if I'm moving too fast for y'all.
You're good.
Am I good? Okay. Ellie, am I good? Okay, hold on.
Okay, I'm good.
All right, perfect. So let's talk about the Financial Services Commission. Okay. The Financial Services Commission is composed of the governor. We're going to give you the simple thing. Financial Services Commission is composed of the governor, the attorney, chief financial officer, and commissioner of agriculture. Those are that's what you need to know. That's the part that you need to know. Department of Financial Services is composed of these individuals. As you'll read in here, it says the commission appoints or removes directors by majority voting consists of 3 affirmative votes with both the governor, chief financial officer, or prevailing side. I cannot tell you if I've ever seen that on the exam. These little small minute things are not that big of a deal, but we do need to know what they do. So the major structural unit of the commission in the office, the 2 offices that establish the commission is the Office of Insurance Regulations and Office of Financial Regulations. So I would put the 2 establishments of the commissions is Office of Financial Regulations and Office of Insurance Regulations. I don't care if you just memorize these things. I promise you, these are easy questions for you to get right. You don't want to miss these. Okay. The Office of Insurance Regulations is responsible for all the activities concerning insurers, including licensing certificates, authority, rates, policy forms, premiums, financing claims, solvency, bilateral settlements. Insurance regulation is over everything that's necessary for an insurance company to be in business. Those are the big dogs. We need those people. The Office of Financial Regulation is responsible for the Financial Services Commission relating to the regulation of banks, credit unions, financial companies, the securities industry. So the insurance regulations, guess what they regulate? They regulate insurance companies. Financial regulations, they regulate the banks. If you can get a good understanding of that, that's all you need to know. Let me know if I'm good to move on to the next one. Yep. All right, the one you need to know, your CFO, Chief Financial Officer. So the Chief Financial Officer has the authority to subpoena, administer oaths, examine witnesses. This is the person who oversees the offices of all of these people. This is the big dog right here. This is the guy that you're going to, if you ask a question, who's in charge of these people? It's most likely the Chief Financial Officer. Who signs off on this? Guess what? Chief Financial Officer. So the Chief Financial Officer is an independently elected and serves as head of the Department of Financial Services and member of the Financial Services Commission. So let's see how this works. You guys see this. So the Department of Financial Services, the first thing we covered, CFOs over all that. He covers all the members of all 15 divisions. The Financial Services Commissions covers all the governors And then the Financial Services Commission regulates the insurance industry and the banking industry. You do not need to know. You don't need to memorize this stuff. You just need to have an understanding of what these divisions do. You do not need to sit there and try to memorize every little thing that they do. So let's go through this. So Department of Financial Services, the main purpose of financial services is to enforce the provisions of insurance codes and execute duties imposed on by the code, general powers and duties and Department included the following. Department of Financial Services, they investigate inappropriate behaviors. If you publish anything that's illegal about other companies, if you're breaking any laws regarding that, they employ the actuaries that are the one that are obviously they handle the stuff with people's as far as death claims, and they adopt the rules to implement provisions of law conferring department duties. Just have an understanding. Department of Financial Services, that's the big dog. That's the one we need to, that's the one that regulates everybody. Okay. The department is responsible for agents, insurers, adjusters, licensing, and investigations. In the event that department finds a person has violated insurance code, it may issue a cease and desist or administrative fines. The department has the authority to suspend, revoke license. Okay, you will see this on the exam. The department has the ability to suspend or revoke your license or certificate of authority. Like they could take the insurance company's ability to write business in that state if they're doing something wrong. And this is the Department of Financial Services. So DFS, Department of Financial Services, they have the ability to stop insurance companies from able to write business if they do something wrong. So next thing, consumer services. The Division of Consumer Services responds to complaints. It's pretty simple. The Division of Consumer Services responds to complaints by consumers. Just like, you know, you'll have in certain companies, like the credit bureaus, they have a third-party company that holds the credit bureaus accountable for either taking things off your credit or they don't. There's always a third-party person there. Unclaimed property. So in order to file a claim as a claimant representative, acquire ownership or entitlement to unclaimed property, receive distribution fees, costs from the department, private investigators, certified public accountants and attorneys licensed to practice in the state of Florida. Good luck. I don't know if you're going to see that on the exam. Unclaimed property. You might just want to come read that. But again, I just want to give you guys the stuff you're going to see. Receivership. What is this? Each agency is required to exercise due diligence within the lawful powers to secure full payment of all accounts receivable and other claims due to the state. I would be surprised if you see anything with receivership. I've never seen that. At all the years I've studied this, never seen that on an exam. Insurers of anti-fraud plans. So let's see this. So insurers are required to file with the Division of Insurance Fraud, anti-fraud plans that include written descriptions of the following. Yeah, you guys, you're not going to see this on the exam. They're not going to go into detail asking you about insurance anti-fraud plans. Okay, you will see Office of Insurance Regulation stuff. Okay, so let's see. The Chief Financial Officer with the Office of Insurance Regulations are concerned with regulations of insurers and their agents. The major areas of regulations include the following. Organizing the licensing of companies, including established initial financial requirements, continuing regulations of insurance companies' activities, including policy forms, Again, this honestly just repeating what we talked about earlier. This is what the insurance companies, they're in charge of all responsibilities for insurance companies. Okay, so here we got some key points we want to focus here, okay? So examinations must be conducted, okay? So sometimes there are audits that have to happen often from these companies. So the CFO and Office of Insurance Regulations have the right to examine the affairs of every person and authorized transaction in the state. The purpose of this examination of insurers, the books and regulations. So I want you to somewhere how to write this in 5 years. At least once every 5 years, there is an examination of the books done by the CFO or the Office of Insurance Regulations. At least once every 5 years. That's an easy question that if you see on there, you should be able to get that right. All right. All right. In lieu of examination, foreign and alien insurers, the office may accept an examination report from the accredited Department of Insurance from the state's domicile. Meaning, your state regulators is not going to go to these other states and countries to do the investigation. They'll allow a third-party person or person regulated to do that. All right. Any person who obstructs the department officer, the office or examiners is the authorized examiner's investigation is guilty if found of a misdemeanor. Let's focus on what matters. Cease and desist. Okay. Any person who violates the cease and desist can be penalized up to $50,000. Write that down. Again, I think we know what a cease and desist is. If there's any misconduct, if you're doing something unfair to the client or based off of insurance regulations, a monetary penalty can be up to $50,000 or suspension, revocation of your license. You want to make sure you write those two down. Those are the two penalties that could pop up the most if you violate any of these codes. Cease and desist, 50,000 up to 50,000, and suspension or revocation of licensing or certificate of authority. Let me know if I can move on. I see you guys are writing spell. You're good, Jed? No, if you need to wait, we'll wait. Okay, let's talk about agency actions. Administrative enforcement guides. Imposing administrative action provides for the financial institution codes, the office must take into account the appropriateness and penalty with respect to the size of financial resources and good faith of a person's charge, the gravity of the violation, the history of the previous violations, and any other matter of justice may require. Why would they? Gosh, I swear that most of this stuff, you'll never see this in real life. Policy approval rates and forms. Okay. Let's always focus on this. Tati, Ellie, Jade, if you ever see any type of regulations and you see the word 30-day, it is a good bet to choose 30 days on this thing right here. So the Office of Insurance Regulations has the authority to approve all forms prior to any policy or contract form, application, rider, endorsements, insurers must be submitted and forms and all changes to the office. All forms must be filed at least 30 days in advance of their use or delivery. At the end of 30 days, the forms are either deemed approved unless disapproved by the office. All you need to know if you ever see a question, if forms are filed, how many days do you need to do it before using? 30 days. The purpose. Insurance professionals must be properly licensed and for a specific line of authority to transact insurance. The purpose of licensing is to ensure the producer meets all the educational, ethical standards required to fulfill the producer's responsibility. They're just saying, hey, you need to be educated. You need to be doing the right thing to be the purpose of licensing. No persons may be, act, or advertise or hold him or herself out to be an insurance agent or customer representative unless he or she is currently licensed by the department and appointed by one or more insurers. It's common sense. Don't be out there acting like you're an insurance agent when you ain't licensed and appointed. Licenses types. Agents. An insurance agent is a person who is authorized by insurers, a fraternal benefit society, or anyone that negotiates insurance contracts. I think we know that, right? Life agent, someone that dadgum writes business or acts, and a life insurance agent is anyone who's within the realm of selling insurance. Whether you're negotiating contracts, whether you're selling annuities, if you are working any form of an insurance product, you're a life agent. Agency, a business. Okay, so you will see this. A business entity such as a firm, corporation, association, partnership, or legal entity must obtain insurance agency licenses prior to transacting business. Just know this. For any company to write business as an insurance agency, they must have the proper paperwork and licenses to do that. I don't know what licenses are required. And one thing you should know here, it says a license for an insurance agency will be issued for a period of 3 years and will be continued to be enforced until canceled, suspended, revoked, or otherwise terminated. That's for an insurance agency. Insurance agency's responsibility is all of the following: name of each majority partner, owner, director. Make sure you have every person's address, their home address, where their business is located. Licensing requirement. Okay, this is the standard question that we should all know. What does it take for someone to get licensed to sell insurance? Well, guess what? The department will not grant or issue an insurance agent's license to anyone who is untrustworthy, incompetent, or who does not meet the following qualifications. Well, I know a lot of untrustworthy and incompetent life insurance agents. And if you guys are watching this video and you are one of those incompetent, untrustworthy agents, make sure you subscribe. So let's talk about this. What does an insurance agent need to be? You need to be a natural person. You need to be over 18. You need to be a legal citizen. Congratulations, Jesse. You are now a legal citizen. And you must be a resident of the state that you're applying for. Okay. You must be licensed and you must be a resident of the state you're getting licensed in. You can't live in Florida. Or sorry, you can't be studying for an Ohio license while you're living in Florida. You got to get your Florida license. And then you can apply for your non-resident license in those other states. This is pretty simple. This is like common sense. Would you agree? I don't feel like I should have to read through all this. I think this is pretty common sense. So let's talk about this. When you are licensed, you must get, okay, so this is kind of funny. This person, you must complete your 40 hours in the state of Florida, which is actually about to change to 30 hours in the state of Florida. They're about to lower the amount of hours for classes. Note that the applicant may not take the same exam more than 5 times in a 12-month period. They passed that rule right after I got licensed because my behind took forever to do that, but I've got a pretty good understanding of it, so we're good to go. You must, this is pretty, if you're going to transfer your license from state to state, your license must be in good standings. All right, so if you did not know, you cannot sell insurance contracts if you're not licensed. You can actually get a temporary license in a whole other state if they allow it up to 6 months, like in the state of Georgia. if you just complete your licensing course, you can actually get temporary license for 6 months. And then you have, again, you sometimes can extend that to a year under very special circumstances. And I don't know what would classify as special circumstances. Exempt for licensing. Let's look at this. An insurance producer may not be required to any officer, department, employee of insurer, organization by insurers, provided that they are not directly or indirectly involved in the actual sale. So when can a person be involved in an insurance sale and not have to be licensed? Well, you can't give a quote. You can't talk about policies, benefits, terms and conditions, coverage. You can't do that. Maybe you're a person who's saying you're taking down information. You don't need to be licensed to do that. If you're a secretary of an office, you don't need to be licensed to do that. Anything that comes into negotiating a contract, you must be licensed for. Background check, make sure you're good. Maintaining your license. So you're continuing education. Every 2 years, you must do 24 hours of continuing education. You must do a minimum of 4 hours of laws and ethics. Write that down. You will see this on the exam. 24 hours every 2 years. If you happen to do more than 24 hours, those hours will roll over to your next period. They are like your back in the day AT&T, your rollover minutes. If you did not use them 1 month, they'll roll over to the next month. All right, for good cause shown, department may grant extension of continuing education up to 1 year. Excess hours accumulated after 2 years may be carried over. Of course, I just said that. Non-resident license. Okay, so in the state of Florida, we're very lucky. We're called a hot state, that we reciprocate. If you do your CE for Florida, it will count for most states. So you don't have to go do CE for all these other states that you're licensed in. So thank God for Florida. Yep, this is all CE stuff. We don't need to cover that. Communicating with the department. If you, okay, you need to write this down. Communicating with the department. Communicating. See, I know something very good about communicating. People always tell me I either communicate super well, or I have people say you don't communicate enough with me. I don't know if you ladies ever have that problem with your man. Says they don't communicate enough, right? Well, guess what? I'm going to start using this. If someone ever says, Miguel, you didn't communicate enough with me, well, according to the laws for insurance, I have up to 30 days to communicate. I don't know if that'll work in your household, but guess what? If you change your name, resident, your business address, your email address, you must update the Department of Financial Services website up to within 30 days. If you do not, you will be fined up to $250, will be imposed the first time. If you don't do it again, you could be up to $500 licensing fines or have your license suspended or revoked. So make sure you do this. Now you'll see another question. If you get into trouble, you must notify the insurance industry within 30 days. Remember how I was talking about that 30-day rule is just a kind of good number to choose? You'll see it. Thank God it's simple, 30 days. All right, an insurance producer must report to the director administrative actions taken against the producer if another jurisdiction or another government agency is within 30 days. Cool, 30 days. If your license is suspended, terminated, or revoked it. A license may have his or her license suspended, terminated, or revoked if found, if you've been guilty, if you misrepresented an insurance company, if you violated any laws. Just understand, do the right thing. Don't get your license taken away. Appointments. We've just talked about this. An appointment is when you are legally able to write business for somebody else. And when you are writing business for somebody else, you are representing the insurance company. not the client. And one of the questions you might say, well, in the following situations, who is the agent's acts bounded by, or who do they represent? You were representing the insurance company when you're talking business, and the insurance company is reliable for your actions. All appointments must be submitted to the Department of Financial Services on a monthly basis, no later than 45 days after the appointment date. An individual who maintains an appointment with the appointing writing class business listed during any 48-month period will not be granted an appointment for the class of the insurance until he or she qualifies for the first-time applicant. I don't know what the hell that means. I've never seen 48 months on this exam. If you see it, congratulations. Number of appointments. Okay. So you can have multiple appointments with multiple insurance companies. Okay. So if you decide, hey, I want to go open up Tati Insurance Company, and you say, I don't want to write for one company, I want to write for 15 different companies, you need an appointment for each company. Okay. Or you could write for just one company, and at that point you are known as what is called captive. You want to write, you want to make sure you know what that is. Captive is when you're writing for one company. Multiple appointments is generally when you are writing for multiple companies. You guys with me on this? Still good? Okay. Appointment fees are non-refundable. Every 2 years, there's always, like, even in our company, you'll have an appointment fee. It's either every year or every other year there's an appointment fee, and it changes. It's not expensive, but you do have an appointment fee. However, if the applicant submits a written request within 60 days after the denial or disapproval of the appointment, the department will refund any taxes. Okay, so you will see this on the exam. Any taxes or state fees are refundable if they are sent in by written request. And that was 60 days. Renewal, continuation, termination, transfer of appointment. You can never transfer an appointment from one agent to another. You can't say, hey, listen, I don't want my appointment no more. I want to give it to my other friend. No, you can't do that. It's only based off of the one person. Appointments are non-transferable. Okay, I've never seen an agent talking about excess or rejected risk. I've never seen that. But let's talk about it. Occasionally, a licensed agent may place excess or rejected risk with an agent's licensing authority with another insurer without being required to have an appointment with the insurer. That would only be allowed if the agent's own insurer rejects the risk for underwriting reasons and can only accept it for substandard basis. But another authorized insurer will be able to accept it as a lower rate or the portion of risk above limits the agent's own insurers will accept. Gosh, it's so textbook lingo. Guess what? Let's ignore that. Just understand that they can get rejected, but you're not going to see that. Unaffiliated insurance agents. Let's read what that is. An unaffiliated insurance agent means a licensed agent except limited lines who is self-appointed, who practice as an independent consultant. You will see this on the exam. So an unaffiliated insurance agent, this is the person who comes in as a consultant and talks insurance business, but they're not getting a commission. They're charging the insurance company a fee for their services. And that unaffiliated agent can't come in as an appointed agent with the company. There has to be an unaffiliated agent. So write an unaffiliated agent means they're a consultant, also called self-appointed, where they practice business. Let's go with agent responsibilities. Okay, we're going to get into some very simple definitions, but these definitions can go over your head if you don't pay attention to it. This stuff is very simple, easy questions to get right. Fiduciary. That is the person. So let's talk about what a fiduciary is. You as the agent has a fiduciary responsibility to make sure you do the right thing by the client. So when it says, what is an agent's fiduciary responsibilities? Is to explain the policies, make sure that they're getting a policy that fits within their needs and their means, but also not commingling premiums. That's an easy question. If you see the word commingling premiums, what is an agent's responsibility? It is to not commingle funds. What does that really mean, though? You get sometimes, like back in the day, we would get a check. We would get a check for the premium, and we would have to send that off to the company. We don't want you depositing that check into your checking account. That's commingling funds. That's illegal. But again, if they have to write it on here, apparently probably somebody's done it in the part of their career. Premium accountability. According to the insurance code statute pertaining to reporting and accounting for funds, all premiums, return of premium, and other funds belonging to insured, other received by an agent, insurance agencies, customer representation, adjusted in transaction is under trust fund. I promise you, don't need to worry about that. Separate account requirements. Let's talk about this. An agent must keep funds belonging to each insurer, which an agent is not appointed for, in a separate account. I don't even know in real life where you would ever come into play where you're having to take money from and you're not appointed with the company and you're dealing with their funds. Let's move on. Insurers or licensed agents may pay only commissions or share commissions to agents who are appointed and licensed to write the same kind of insurance. Okay. So let's just say you're licensed with our company, and then you have another friend that's licensed with another insurance company. Let's just say you gave them as a referral because we couldn't help them, or vice versa. Just because you're licensed and you gave that person as a referral to someone else, you can't share the commissions with that other person because you're not appointed with their company. So in order to share commissions with anybody, you have to be appointed with the same company. It is considered illegal practice to act and knowingly to collect excessive charges. Did we miss the definition of sliding here? Regulation does not prevent receipt renewal. Okay, whatever. We're going to talk about controlled business here. Okay, these are easy definitions. Controlled business is when you write, I want to say it's 50%. Is it either less than 50? Okay. Controlled business is when a licensed agent cannot exceed more than 50% of their business. So let's just say you get licensed just to sell insurance to your mom, dad, cousin, baby daddy, baby mama, your neighbor, all the people that's in your family, right? You cannot write more than 50% of your business with that people within a 12-month period. You must have another half of your business outside of that. Does that make sense? They have to be outside clients from that. So if I'm writing controlled business, cannot exceed more than 50% within a 12-month period. Writing business with your family friends. Record keeping. Okay. Just write record keeping, maintains transaction for every 3 years. This is, just understand, record keeping, maintain records for 3 years. That's insurance transactions. Reply to Department of Financial Services, Office of Regulations. So let's talk about the Code of Ethics. The Code of Ethics for producers. That is simply saying, hey, listen, there's no conflict of interest. You're not going out there supplying confidential information to competitive companies. You're doing the right thing by your clients, right? You're not engaging in stuff that has nothing to do with your field. Producers are required to perform a professional manner at all times. Professionalism means that a person is engaged in occupation requiring an advanced level of training, knowledge, or skill. Being professional means placing the public's interest above one of its own in all situations. Let me read that for you other agents out there. Being professional means placing the public's interest over yours. I was going around with some of these guys. So ethics, just make sure you do the right thing by your people. Code of ethics, life underwriting. Okay, here we go. Trade practices. I want you to write twisting and I want you to write churning. These are two different words, but they're very similar offenses. Twisting is, let's just say you have a policy with ABC company, and I'm trying to get you to convert to my company. And I simply say, Ellie, you have this amount of coverage and this type of policy. Come do it over here. When it's not in the best benefit for you. That is called twisting. So maybe I misrepresent some of the facts. Somehow I'm convincing you to do something that is not in your best interest. That is called twisting. And next to twisting, I want you to write external companies. That is when you're replacing one policy from one company to another when it's not in the client's best interest. Then you have the word churning. Churning is the exact same thing, but it's within the same company. So let's just say, Ellie, you have a product. I come back to you 3 years later and say, hey, listen, I have this product for you. Why don't we replace or convert to this new product? But it didn't do you any benefit. It didn't put you in a better situation. That is called churning. And I've known agents out there to do this, and it's illegal. And they said it's a $75,000 fine for each violation. So you'd be broke before no time. Sure. Does you have any questions on that? No, okay. So agent ethics, okay. I want to fly through this, but I want to make sure I take the time on the right things here. Okay. The private of consumer information. So the regulation was designed to protect the confidentiality of consumer financial records. It assures that consumers that their financial records cannot be accessed without their consent, and prevents insurers from requiring the release of financial records as a condition of doing business. You imagine an insurance company says, hey, listen, doctor, let me see your checking account. Let me see your financial, let me see your credit score. I'll make sure that I want to see if you're qualified to do business for this. No, that's what the consumer of information, privacy of consumer information. The insurance guarantee fund. I'm going to keep this very simple. The Florida Life of Guarantee Association. This is like the FDIC with this association protects consumers from an insurance company from going insolvent. And you want to write that down, the word insolvent. If an insurance company, all their clients had to file a claim at the exact same time, the life Guarantee Association ensures that the company has enough funds in reserve to pay all the claims. So it protects them from going insolvent. But it is only up to a certain amount. $300,000 for life insurance death benefits. So you want to write that down. The Florida Life Guarantee Association protects consumers that if a life insurance company goes insolvent, or if it needed to file a claim for all its clients, it would cover up to $300,000 for every life that they had on file. Up to, yeah. Like the bank has the FDIC up to like $250,000 at the bank. And another thing you want to put in here, it is illegal to advertise that you are insured by them. You'll see a question on the exam. Hey, if this company does this, is it forbidden? If you see the word forbidden, boom, click that. That's the answer. All right. Unfair trade practice. Okay. Again, keep this simple. Unfair trade practice I'm reading this to try to justify it. It is unfair trade practice to make any statement that ensures policies guaranteed by an existence. Okay, this is what I was just saying. You cannot say that the Life and Health and Guarantee Association insures this company. You can't put that into an advertising. Like, yeah. This is what I was looking for. Unfair marketing practices. Insurer and insurance companies may not engage in any trade practice that is defined as or determined to be unfair of method competition. So the ways that people in insurance that is illegal, you cannot go about doing these practices when you're selling insurance. Misrepresentation. Write this one down. Misrepresentation is when you are giving deceiving or misleading information about policy benefits. You are giving misleading or deceiving information about policy benefits. And this could be verbal also, it says. Advertising, false advertising. Okay. I swear. Let's read what false advertising. Advertising covers a wide scope of communication from publishing in an ad newspaper to broadcasting a commercial, television, internet. So old school. Where's the social media? Advertisements cannot include any untrue, deceptive, or misleading statements that apply to a business of insurance or anyone who conducts in it. This is a violation of false advertising. It is prohibited to advertise or circulate information that is untrue. I guess false advertising would be advertising misleading information also. Misrepresenting terms, benefits, conditions, financial conditions of any persons or insurance companies. I think that's pretty straightforward. Okay, here we go. Rebating. You want to write this one down. Rebating is to induce. When you say like induce and like inducement, this is when I'm going to offer you something and in return, I'm asking you to do business with me. So Ellie, Tati, listen, I got a policy here. If you get the policy today, I'll give you half my commission. Or if you get your policy today, I'll give you tickets to the Jaguars game tomorrow. I'm offering you something in return to convince you to do that. That's illegal. Like you remember back in the day, Best Buy or something, they would do called mail-in rebates. You buy TV and then you send in this coupon and they're going to give you X amount of dollars back. Well, those are rebates. They're offering you something more for you to buy the TV today. So those are rebates. It's illegal to do that. Make sure you have those examples. Rebates may only be given as reflected in rebate schedules. Agents are required to maintain a copy of rebate schedules every 5 years. Okay. We need to know the regulation does not apply to advertising or promotions. So if I gave you a bunch of t-shirts that said our insurance company's name on it, that's not rebating. That's actually considered marketing material. There's no budget for that. You can give that as much as possible, but you cannot give gifts anything exceeding $100 per person in a 12-month period. So I can't go around saying, hey, listen, I got $100 gift card for someone who gives me a client. I can't give more than, I want to say let me just make sure I'm reading this right. The regulation does not apply to ensure that advertising promotional gifts may be given to articles, merchandise, and store gift cards, and any other item exceeding $100. Okay. So you can't give any items as far as rebating anything more than $100 within a year. What's this word? Is it coercion? Coercion? How you say it? How you say it? Coercion?
It's coercion. You had it right the first time.
Gee, I'm getting better. Hey, okay. So coercion. I want you to write the word to intimidate. These are key words you'll see on the exam. To intimidate. This is someone that would say, hey, I'm going to use my physical size or my mental. Maybe I'm very persuasive. I'm Rico Suave over here.
Huh.
Yeah. Am I Rico Suave? Yeah. See that? Jade said that. So coercion is to intimidate you to buy a policy. Can't do that. The word sliding. I want you to write the word sliding. It is to tell you that you are required to have more coverage legally for whatever reason. So let's just say, hey, Tati, Ellie, you're married, you need to have X amount of coverage more. Not because you actually need it. I'm just telling you to do it because I want a commission. So I can't tell you that you need more coverage just for the purpose of generating commission out of that. So you need to make sure you have that. It is false leading information applicant to believe that specified additional coverage or product is required by law when it is not required, and that it is included in the policy without an additional charge when a charge is required. Sliding also includes charging an applicant for a specified coverage or product in addition to the cost of coverage. I hate their textbook terminology. Just put it this way: sliding. It's illegal to tell you need more coverage by law. Okay, I talked about churning. Let's just review it. Churning is defined as replacing a policy for the sole purpose of generating a commission within the same insurance company. Twisting is misrepresentation or giving you false comparison to policies to get you to switch from one company to another. Defamation. I think we know about defamation. Defamation is when someone is orally or talking bad about a company or an agent. You cannot say, hey, listen, that company over there is this, this, and this, and this. You can't do that. You can state facts, but you can't go around talking trash about insurance companies to your clients. And when you do that, you look weak anyways. When you have to bash the competition, you look weak. So make sure you write that down with defamation. It's when oral or written statements are intended to injure a person engaging in an insurance transaction. We're almost done here, ladies. Unfair discrimination. This is when you are discriminated based off of your race. You can't do that. You can't discriminate against someone based off of their sexuality. You can't discriminate based off of anyone's gender. But you can discriminate based off of someone's lifestyle. If someone is a skydiver and they like to do some craziness, you can tell them, hey, listen, this ain't gonna work. They're gonna charge you more. The insurance company can discriminate against you on that. We're almost done here, y'all. Unfair claim settlement options. Unfair claim settlement. This is when you have filed a claim and the insurance company has not even acknowledged it. That cannot exceed 30 days. All you need to know. Unfair claim settlement is when an insurance company has failed to acknowledge your claim within a reasonable time, 30 days. Concealment. Concealment, hey, you are withholding information. Write that down. The client is withholding information of material facts, or you're withholding misinformation. This is generally for the client though. So let's just say they're concealing, they're not a smoker, but they are. Guess what? The policy could be void at that point. Concealment. Fraud. Okay, I want you to write the word fraud, and I want you to write to injure. If you intentionally misrepresent anything in the policy to convince someone to switch, that is fraud. And I want you to write the word to injure. If you see the word on the test, to injure, the answer is fraud. If you see the word to intimidate, the word is coercion. If you see the word to induce, that answer is rebating. You follow me on this? And guys, that is all we need to know about chapter 4. Is that chapter 4 or chapter 5? That's chapter 5, isn't it? Dang, yo, we're chapter 5. Let's go. Let's go ahead and knock out this quiz right quick, guys. Come on. All right. Under what circumstances continuing education requirements may be extended beyond 2 years? How many months? I didn't give you this answer. You're not gonna have it in your notes.
6 months?
I'm gonna give it to you. It's 12 months.
12
So
months.
write it down. Excess classroom hours accumulating 2 years can be carried over if good department. Yeah. So if you do not get your stuff done, you sometimes will have up to a year after that, but it cannot exceed a year. So you have to get 24 hours done every 2 years. But if something happens, again, under special circumstances, they'll extend it up to a year, no longer than 12 months. Which of the following entities is not an insurer, is not an insurer, but an organization formed with the provide insurance benefits for its members? We talked about this. Hey, congratulations, that is it. Listen, easy answer. Just remember what a fraternal benefit society is. Under what circumstances can an agent's appointment be transferred to another person?
A.
Hey, you see the easy answers because we just went through the basics. We don't need all that other text lingo. Okay, applications to an insurer must include all the following except. So applications to an
B.
insurer. Huh?
Yes, I'm boy.
I agree. Yep, I told you this. They don't need that. Good job. No insurance policy form can be issued, delivered, and used in a state unless it is. So we're talking about the forms. Who regulates this stuff?
Oh.
That's the chief financial officer.
So remember, just talking about no insurance policies or forms can be issued, delivered, and the state who regulates the insurance companies.
Is it A?
Has nothing to, the governor has nothing to do with the insurance industry.
B, the Office of Financial Regulation.
Okay, huh? Okay, Jade says, let's go through these, okay? Reviewed by the Office of Insurance Regulations. That could be, but they throw up an approval by the governor. Governor ain't got time for that. Approved by the Office of Financial Regulations. Well, that would be true, but financial regulations, they're the one who covers the banks and financial companies. So it ain't them. Developed by the Chief Financial Officer. Chief Financial Officer ain't developing forms. So it's filed and approved by insurance regulations. You see how we just break this down, process of elimination? If we just take our time. Okay, I already know this one. So just tell me, come on. First question. Read the first couple words. What does that answer? You ain't even got to read it. You see the key word is go to it. Okay. Jay says C. Y'all want to go C? Boom. You see the word inducement, boom, go with C. Don't even second guess yourself. I guarantee you that's the answer. Let's go. Great job, babe. So pertaining to insurance, which of the following is an example of producers' fiduciary responsibilities? Remember, when you see the word fiduciary responsibilities, it's talking about making sure the insurance companies get their money.
You just said the fiduciary is the one that makes sure that the insurance get its money.
Yes.
The insurance company or the insured?
No, the insurance company. Remember, as the agent, you are representing the insurance company. Jay says B.
B.
Great job, guys.
Yeah.
Yep. Listen, fiduciary, remember, you taking the money from the insurance, from the client, give it to the insurance company. That's your responsibility. Do not commingle funds, get them their money. If an insurer meets the state financial requirements and approve to transact business, this is required. Come on.
They're approved, they're authorized.
Okay, so did we ever see the word approved? No. Did we ever see the word qualified or certified? No, you would have only seen the word authorized or admitted. Only two words, see, authorized or admitted. See, you see how this is nothing but definitions?
Yes.
Okay. An applicant knowingly fails to communicate information that would help the underwriter make a sound decision. Boom. We just get
Concealment.
absolutely right. Concealment. They withheld information. Do you see the word withheld information up in this hole? No, but you get the idea. Great job, Ellie.
Yeah.
Yep. How often must domestic insurers be examined by the Florida Department of Financial? Remember, we just went over this one.
B.
B, at least once every 5 years. Remember all that other bull crap they had up in there? You didn't even need that? This is what we needed. All right. And the requirement that an agent does not commingle insurance monies with what is their own funds is called what? You guys are, Jade is saying D. What are you guys saying?
The requirements
Not single.
No, you got it right.
D.
You don't commingle your funds.
Oh,
You don't take the client's money, put in your account. That's commingling. So it's your fiduciary responsibility to ensure that you take the money from your client to the insurance company. Did y'all get that right? Were y'all confused on that?
That one did confuse me, but okay. I understood now that mingle and.
So, what term best describes the act of withholding material information that would be crucial to the underwriting decisions?
It's B again, concealment.
Come on. I hope this test is this easy for y'all. Come on. All right. An insurance producer just sold an insurance company to the policy. What kind of business is this?
Control.
Controlled.
Control. What'd you say? So let's look at these other words. Did you ever see the word internal? Did you ever see the word personal? So you can sometimes, if you confuse, just think about your studies. Did I ever even see those words? If you never saw the word, cut it out, take it out. But make sure you're actually reading, so you actually do catch the words that are in there. You don't miss it. Okay. All of the following would be considered insurance transactions except. Okay. This is talking about when would a person not need an insurance license? Which activity would not be considered an insurance transaction?
C.
Which of the following would not be an insurance transaction?
B.
B. Getting your insurance license is not an insurance transaction. Great job, Ellie. Great job. All right, an agent's clients need additional insurance, which the agent's own insurer cannot provide. The agent has solicited additional coverage from another authorized insurer. This is known as so you remember that one part of the test I said you'll rarely see this? It pops up at the end. I talked about this, the process of eliminations. Which ones can we get rid of immediately?
Authorized
We
B.
can get rid of authorized.
and controlled business.
Correct. So we can get rid of those. So this is either excess or rejected. So it says the client needs additional insurance
is it A?
and the
That's
agent,
A.
you want to go
Go
A?
with A.
I personally don't know this one.
Go with
Let's go with A. Let's read it.
What's additional?
So a licensed life agent may place excess or rejected risk within the agent's licensing authority with another insurer without being required to have an appointment with that insurer. Excess business to the portion of risk above limits in which of the following agents own insurance. I'll tell you, that was rare that ever popped up. Well, good job, guys. We got 100. Great job, ladies. We literally only have one chapter left, and that is going to be Florida laws, regulations, and statutes. And if you guys know, I've never recorded a video for this because guess what? There's really nothing for me to read for you guys. Would you agree? Give me a second.